Hi, in this video we'll be dealing with budget. So what exactly is meant by budget is the simplest question that probably we'll have to find an answer for. Before going about anything, let's just understand the meaning of budget in layman terms. Let's just assume, take for example, your dad is giving you X as your pocket money. X can be 100 rupees to 1000 or 10,000 that you can assume. So that particular amount, once you receive as a pocket money, you are supposed to spend it probably whole through that particular month, depending on the different kinds of expenses that you might incur in that particular month. Say for example, as a student, you might incur expenses regarding any of the stationery, exam fees, or your food and different article purchase or something as such. In the same way, let's take another example. Assuming, or let's consider that your father, who is the head of the family, who is an earning person in the family as well, so he's earning a particular amount as income, in simple also known as salary, right? So that particular monthly income, whatever the father is earning, will be used for any of the family expenditure meeting kind of a purposes. So say for example, it is in simple terms known as a family budget, which deals with what are the different expenses that is going to be incurred by the family or family members for that particular tenure, that is going to be probably say for 1 month. All right. So moving about in the same sense, considering in terms of an organization, then any kind of a monetary or a quantitative expression of business plans that is to be pursued in the future is a budget. All right. In simple terms, if in case you want me to define, then budget is nothing but a plan or an estimate of the amount of money that is required or needed to be used for a particular or a specific purpose is known as a budget. And what exactly is budgeting then? Budgeting is nothing but a simple step-to-step procedure that is to be followed in order to prepare a particular budget. It is known as budgeting. So moving about with the next is budgetary control. Budgetary control is an organized, systematic effect to keep the costs under control so that the revenue that is going to be generated can be at the higher level. So that is known as a budgetary control. And there are certain steps which are necessary for the successful implementation of a budgetary control. The steps, you will be seeing it on the following slide, but to give you an insight, then there are mainly around 6 steps followed by the determination of the key factor. The first one being the organization chart. The organization chart is a brief on to the hierarchy level, which starts from the managing director, going about with the chief executives, and then to the officer, and then the budget committee, followed by the different functional managers. Here the functional managers, in simple I mean to say, regarding the different functions that a particular person is carrying out in an organization. Say for example, production manager deals with production budget. In the same lines, sales manager will be dealing with sales and advertisement budgets. Finance manager would be preparing budgets related to the finance terms, that is, it might be the receipt budget, the cash budget, and things related to finance only. The accounts manager will be preparing a master budget which involves all the different budgets in it. At the same time, the cost budget, which is also prepared by the accounts manager to maintain the accounts in the organization. Purchase manager will be preparing purchase budget or any of the materials required kind of budget. R&D manager will prepare budget related to research and development. And in the same sense, personnel manager will be dealing with things like labor budget, staff welfare, and so on. So the next step is budget center. Budget center is the part of the organization for which the budget is basically prepared. In this particular slide, you can see the organization chart. This is what I was trying to explain when I was telling you in terms of theoretical aspects. Going about with the third step, it's the budget manual. The budget manual is a document which spells out the duties and also the responsibilities of various executives who are concerned in preparing the budget. The budget officer is basically the person who is in the top of the organization, who basically appoints some person as the budget officer, and the budget committee is a group of executives of various functions in the same line, and budget period is the length or the tenure for which the particular budget is prepared. Here you can see the classification of budget, and as I was telling, there are mainly four classifications how we go about it. The first one being in terms of time. The long term budgets are generally prepared by a particular business or an organization who is foreseeing or going about the tenure being somewhere around 5 to 10 years. The short term budgets are generally prepared for 1 to 2 year. The current budgets are generally prepared on daily or monthly or at the maximum for a couple of weeks. Moving on to the next basis is the nature. Depending on the nature, there are two classifications, one being the fixed budget and the second being the flexible budget. We will be dealing with in-depth information in the following slides, and couple of sums that we will be solving. You will be able to understand it in much better way. But on a basic note, then fixed budget are those which are prepared on the basis of a fixed or a given level of activity. I repeat, the level of activity is going to be fixed, but when it comes to the flexible budget, it is a particular budget which may frequently change according to the level of the activity. For example, say in the fixed budget you are preparing for 100 numbers or 100 quantity, but when it comes to the flexible budget, it might have an increase or a decrease to 200, or say even decrease to 50. Next one, on the basis of content. So on the basis of content, there are two sub-classification. First one being in terms of monetary, and the second one being in the physical term. So budgets in the monetary term are expressed in terms of money valuables. That is, like for example, in India, it is going to be represented in rupees. So in the same way, when it is the cash budget, that's the best example for the monetary budget, or even the capital expenditure budget. So budgets in the physical term are those which are prepared or expressed in terms of a particular material. That is what is called as physical term. So for example, it might be any of the material budget or any of the production requirement budgets. Those are all the examples for physical terms. So the next and the last classification is on the basis of the function. So depending on the different activities or the operation of a firm, there are number of budgets which are prepared depending on the size and the nature of business. So master budget is one among which has the various functional budgets integrated into one particular budget, that is known as a master budget. It is a very important 3-mark question. And the other functional budget examples, if in case I have to quote, then it is sales budget, production budget, or any purchase budget, labor budget, the overhead budgets, or the materials budgets, and so on. Moving about with the next subtopic in budgets is one among the important topics, that is the features of budget. So when we are talking about the features, the important feature of budget basically is the first one being it is prepared for a specified period of time. So the plan of action which is going to happen is going to be specified in terms of the time. The second one, in terms of the activities, then it is prepared in advance. So it's a future plan, which we have also discussed in the definition. The special form of the statement in which the management is planning any in terms of numerically is expressed in physical units. For example, say in sales units, then the quantity is going to be mentioned. So the other feature is that it is a particular tool for developing the cooperation and the coordination at the same time, the control of any kind of an activity. So these are the main 3 tools. The next topic or the important part is about objectives. The objectives are as such in the slide which you can see. The first one being it is prepared for forecasting and plan for the future, so that any of the losses can be basically minimized. Moving about with the next objectives of preparing the budget, it is basically done in order to forecast and plan for the future, so that any of the losses can be minimized, and in order to maximize the profits. So it is to basically have more economical use of the capital as well. It is in order to also control or prevent any of the waste, so that the expenses in that particular terms can be minimized. It is to coordinate the different activities of the different departments or any kind of a center. Budgets are also prepared in order to coordinate the different activities of the various departments. It is prepared to plan and control the expenditure of the firm so that the revenue can be maximized. It is also prepared in order to fix the responsibilities of the different departments so that it can facilitate the different departments to operate more effectively and efficiently. All right. Now let's try and understand what exactly is meant by flexible budget. So as I was already discussing in the initial part of this particular presentation, budget in simple terms is considered as a tool for two main reasons. First being for planning, and the second one in order to control any of the extra expenses or expenditure that is going to be incurred, right? So let's assume over here, for example, assuming that you own a chat center. All right. So here I repeat, assume that you own a chat center. So let's prepare a budget together and see how it is going to be a fixed budget and how is it going to be converted onto a flexible budget. So let's again assume that monthly the inflow of the customers in the chat corner or the chat center which you are owning is going to be for 100 customers. Andre quantity, a number of people, the queue over here is assumed at 100. All right. We are expecting somewhere around 100 customers. So the chat center, as you all know, is going to have various chats, right? So let's go about pending each different chat which is available in the chat corner. I'll just quickly draw a particular column wherein, like, the first column is going to be representing all the particulars depending on the different costs that are going to be involved. The next one is the per unit column. The final one is the total cost. All right. So in terms of the total cost, it's the complete per unit into the N or the Q, whichever we are considering, is going to give us the cost. So in terms of the particulars, the first category, let's say Pani Puri. All right. So every plate of Pani Puri, let's assume it to be somewhere around 500 grams. Okay, so I'm just mentioning it as 500 grams. So I'll come back to the per unit column in a bit, but let's go on to the next variant or the category. The chat corner also has Dahi Puri. All right. So in Dahi Puri, let's assume it's going to be for say 750 grams. And then the next variant or the chat is going to be say Sev Puri. So Sev Puri, again, let's assume it to be 750 grams in a plate. And the next variant, let's assume it to be Masal Puri. And Masal Puri is going to be somewhere around 700 grams. Okay, I think the chats are good enough, and now let's take on to our other costs or expenses. So it's going to be firstly the wages, and then the rent that I'm supposed to pay or for owning the chat center, and the insurance and so on. These are just the assumed factors. So here when we are talking about the per unit, I will just say, like, for 500 grams in simple, for as you all know, the grams, 1000 grams is equals to 1 kg, right? So it's 500 divided by 1000, so I'm getting it as 0.75 for Dahi Puri. Accordingly for Sev Puri, and Masal Puri is 0.7. I've just converted onto the decimal figure over here, and in terms of the wages, rent and insurance, I'll directly put it onto the cost column, because the wages, rent or insurance is, in simple terms, the fixed costs, those are going to be involved, right? So let me just quickly multiply and see 0.5 into 100, so which is going to give me 50. In the same way, 0.75 into 100, that is 75 for Dahi Puri and Sev Puri, and Masal Puri 70. Assuming the wages at 3000, rent also at 3000, and insurance, let's just say 400 rupees. All right. So I'll quickly calculate the total of this. So let's calculate the expenses that's going to be incurred. The total of the above is going to be 6,370. Am I right? So when we know the expenses, we're also supposed to know what exactly is the revenue that I'm generating, right? So let's assume per head whoever is coming in the total 100, the Q being 100, the per head expenditure that they are incurring is 100 rupees. So let's assume 100 into 100. So the revenue being 10,000, right? 100 into 100 in simple terms is going to give us 10,000. So when it is 100 people who are expected and who are coming to my chat corner, I'll be earning a revenue of 10,000 and I'll be incurring the expenses of 6,370. So let's just try converting the same on to 200 level. So as you can see, I'm quickly going about multiplying. So when the Q is considered to be 200, then the pani puri is going to be costing me 100, 150 for dahi puri, sev puri and masal puri is 140. The wages, rent and insurance, as you can see over here, I'm trying to maintain it common, the same one, because it is the fixed cost. So the total being 6,640. And here, if in case you ask me, then the revenue is going to be 100 into 200 in simple terms is going to be somewhere around 20,000. The revenue generated for when it is 200 people is going to be 20,000 when it is 200 people. And the profit, as I've already said, when it was 100, it is 3,630. How did I get the profit? Then profit is equals to revenue generated minus the expenses that is being incurred. So here it is going to be in terms of for 100, then the revenue generated was 10,000 minus the expenses incurred of 6,370. So my profit here is 3,630. So in the same way you can calculate when it was 200 as well. But before that, let me just put on the revenue column also so that you will not get confused. I have assumed that each particular person who is coming to the chat corner is expected to have a expenditure or an expense of 100 rupees. So 100 rupees per head into 100 whom I am expecting, so is going to give me 10,000 when it is 100 people who are expected, and in the same lines 20,000 when it is 200 people expected. Alright, so here in the final column I am going about with the variance. Variance is nothing but when it was 100 to when it is increased to 2,000, what exactly is the difference. So here as you can see, 10,000 minus 20,000 in simple is 10,000. I am writing it as favorable because my revenue is increasing. In the same sense, when I am talking about expenses, it is from 50 rupees to 100 rupees, which is increased by 50 rupees when it comes to my expenditure. So I would just put it as within the bracket saying it is not favorable, because my from my pocket the amount is going, right? So it is an expense. So that is where I am putting it onto the bracket, telling all these things are on the expense category. So when it comes to wages, rent or insurance, I am not writing anything because it has been the constant, be it when it was 100 or when I have assumed or increased the quantity to be 200 as well. So this in simple terms is gonna give me a total of say, let's just quickly calculate, 10,000 minus 50 minus 75 minus 75 and minus 70, giving me 9,730, which is favorable because excluding even the expenses, I'm leading on the profitable note. So in simple terms, to summarize over here, if I have to say, then the original budget, if in case was prepared only for the quantity 100, that is going to be called as a fixed budget. But when it is adjusted or made flexible, that is increasing from 100 to 200, which is called as an adjusted budget, is nothing but, in other terms, it is called as a flexible budget because of the change in the quantity. So budget is nothing but an activity which involves planning and forecasting with respect to the estimates that is to be drawn. I'll just repeat. When we are preparing a particular fixed budget, then the quantity is going to be fixed. In this particular example, if in case we would have just considered at the quantity being 100,
then it would have been called as a fixed budget. So it is only prepared for a particular quantity which is already predefined and pre-given. But when it was adjusted to 200, that is assuming that when the number is going to be increasing, that means it's also increasing my other relative expenses and also might be an increase onto the revenue. That assumption, when you made and increased it from 100 to 200, it became a flexible budget. So a budget which is prepared in order to strike the balance between the income and the expenses is nothing but called as a budget. When it is adjusted, it is called as a flexible budget, because there is a change in the quantity, that is Q, which we have discussed in this particular video. This is about how exactly is a flexible budget done or prepared.
So now let's quickly analyze in terms of technicals. So as I've discussed, on the basis of nature, there are two distinct categories of budget. One being the fixed budget, the other being the flexible budget, right? So fixed budget is a particular budget which is prepared at a specific level of activity, then it is called as a fixed budget. So in terms of flexible budget, the anticipated cost for a range of activity levels are generally going to gear up, or in simple, it is going to change from one level of the activity to another level of activity. Apart from these two, there is also one more kind of a budget which is known as a variable budget, or in simple it is also called as probably like step budget, sliding budget, or expense formula budget, dynamic budget, or even an expense control budget. That is because in this particular criterion or a particular variant, the variables in terms of costing are going to be like showcased. So that is why it is called as a variable budget. So in terms of costs, then we can have a broad classification onto three different categories. First being the fixed cost, second being the variable cost, and third being the semi-variable cost. So fixed cost, in the particular example, if in case you have seen the wages, the insurance, the rent, they had the particular cost being constant. So whatever cost which remains constant within a particular given range of activity, in spite of the change in the volume of production or the quantity, in simple terms, is known as a fixed cost. The variable cost keeps changing in terms of there is a variation in terms of the activity, then it keeps changing. Semi-variable cost basically increases with the level of activity, but it intermittently jumps than the continuously, then it is called as a semi-variable cost. I'll give you a tip over here. When it is fixed cost, the fixed cost will vary per unit, but in terms of total cost, it's going to remain constant. When it is variable cost, then the per unit in the variable cost is going to be constant, but the total cost is either going to go up or come down, that is increase or decrease with the sales units or the production quantity. And when it is the semi-variable cost, which as I have already said, it increases with the level of the activity. I'll just repeat this particular tip. Per unit for any of the fixed cost, it's going to vary. Total cost is going to remain constant. And when it comes to variable costing, the total cost is going to vary and per unit cost is going to remain constant. Alright? So that's about the understanding of what is meant by a budget, budgetary control, fixed budget and flexible budget, and the relative key terms along with the different types of costs that's going to be involved. So in the next video, we will look into how to solve a particular problem and how to prepare a fixed budget and a flexible budget. Thank you.